Welcome to the Weekly Dividend Recap for the week of April 8th, 2023. I'm Nick, host of the Dividend Growth Income channel. The Weekly Dividend Recap is a weekly news video series put out Friday evenings or Saturday mornings to sum up some of the latest news around your favorite dividend-paying stocks. If this is something you enjoy, please consider liking and subscribing to help us out in the algorithm to spread the amazingness that is dividend growth investing. And folks, I'm just a regular guy. I'm not a financial advisor. This series should not be taken as financial advice. Let's just make sure we're clear on that. And guys, I know I'm not getting these out every single Friday like I would like to. Some weeks it's not easy to get a video out, but I promise I'll get these out every time I'm able, and I think it's worthy news to report. And I do appreciate all of the support. Now, Q1 of 2023 is now behind us. We are now 14 weeks into 2023. The S&P 500 is basically flat over the last week. But year to date, it's up over 7%. Meanwhile, SCHD has been hovering around the same price all week, around $73. I added a share at $73.15 earlier in the week in my Roth. Year to date, SCHD is down about 3%. Here is a quick look at SCHD's top 10 holdings. It's changed a little bit since we last looked. AbbVie is now the top holding of the fund, and newcomers Chevron and UPS are also now in this top 10 mix. IBM has been removed. I'll go over this in some more detail in my Roth IRA investing update coming in the next week here. Now I want to provide an update on Dividend King, Johnson & Johnson, ticker JNJ. This is a stock we talk about all the time, and in a recent video, I took a closer look at why the stock had dropped so much, the cloud of litigation around the company, what we know so far about the Kenvue spinoff, which is going to spin off their consumer health products. And that's going to happen later in the year. Now, I'll leave a link in the description to this video if you haven't checked that out yet. But this week, we've learned there's been some progress made on settling the thousands of lawsuits related to their talcum powder-based products. It's looking like an $8.9 billion settlement is going to be made to handle all current and future claims. J&J claims more than 60,000 claimants support this offer. And the markets have reacted positive to this news. J&J is now up almost 7% in the last week, just like that. I hope you guys took note when we pointed out J&J as an undervalued stock for the month of March a few weeks back when it was in the low 150s. And if you managed to pick some up then, well done. At current levels, I look at J&J as more a reasonably valued stock, closer to fair value, but this is among the highest quality of dividend stocks historically. Getting a stock like Johnson & Johnson when it's undervalued is an opportunity that just doesn't come across all too often. Today, shares are yielding 2.74%, which is just about in line with its 5-year average, and its PE is at 15.7, just a touch below the 5-year average of 16.6. Like I said, it's right around its fair value. We'll keep an eye on things as this litigation hopefully settles. This $8 or $9 billion they end up settling is going to be paid out over the course of many years. We're talking 20, 30 years. J&J has the balance sheet and the financials to cover this. There's no concern on the dividend payment. We'll keep an eye on word also for the upcoming Kenvue spinoff, so make sure you have hit that subscribe button. Moving along, we have some huge news coming out of the REIT space and self-storage sector. ExtraSpace Storage, ticker EXR, came to agreement to acquire Life Storage in a $12.7 billion deal. Upon closing the deal, this is going to make ExtraSpace Storage the largest self-storage REIT, supplanting Public Storage, ticker PSA. Under the terms of the deal, if you're a shareholder of Life Storage, you're going to receive 0.895 shares of ExtraSpace Storage for every current share you hold, and this will create a potential dividend increase of 21% for those investors who are currently holding Life Storage. Shares of both ExtraSpace Storage and Life Storage rose about 6% each over the last week on this news. And today, shares of EXR are yielding about 4%, and it looks to be undervalued relative to both its 5-year average dividend yield of 3.35% and its 5-year average price to adjusted funds from operations. So ExtraSpace Storage looking intriguing. This sector of self-storage, one of the more interesting sectors in real estate, in my opinion, and we do have a video in the works that's going to cover all of these companies more in depth. Of course, this new acquisition does change things, but I'm going to keep you guys in the loop on ExtraSpace Storage, Life Storage, and other great real estate investment trusts. Next up, AT&T, ticker T, declared its next dividend this last week. It's been 1 year since their dividend cut, and we were hoping they would announce their first post-dividend raise since that cut this time, but they did not. On April 3rd, AT&T declared a quarterly dividend of 27.75 cents per share, right in line with their previous. As a shareholder who has given them a second chance, I'll admit I'm disappointed in this news. AT&T does have substantial debt, as most telecoms do, but I was hoping they would at least give us like a 4 or 5% raise. Now, shares of AT&T are yielding 5.65%. This is an income stock. It would be nice to see them raise that dividend just a little bit to show shareholders are committed to increasing their dividend income. The current payout takes up only 46% of earnings and 64% of free cash flow, so it's well covered. SimplySafeDividends.com gives AT&T a safety score of 70, rating it safe. Hopefully in the next few quarters they throw us a bone. I personally am a Verizon investor. I prefer them, and I hold a lot more of them as opposed to AT&T. My AT&T position is just a couple $100s in our public YouTube account here, while I have about $1,600 worth of Verizon in a private portfolio. Now, they have a better safety score as well of 80 and a 6.61% yield. Slow but steady dividend growth as well. I am definitely rethinking my current position in AT&T, but I'm probably going to keep holding it for now. I do see a benefit to holding some of both of these companies, not putting your eggs in all in one basket. But then there's the other argument that these companies have been dead money for the last decade, and some investors may prefer to just avoid them both and look for more growth. I'm not living off this income, so that's what's going on with AT&T right now. But let's shift our focus to dividend raises. Really only one to report on this week, and that is FedEx. On April 5th, the shipping and logistics giant raised its annual dividend payout by nearly 10%, and this makes for 21 years of uninterrupted dividend payments from FedEx. There were a couple years of a maintained, not raised dividend with FedEx around 2020, but even with that, FedEx sports an average annual dividend growth rate of 15%. If you have your shares by June 9th to collect FedEx's next quarterly dividend payment of $1.26, FedEx pays in the months of January, April, July, and October, and today's shares are yielding just over 2%, 2.17%. FedEx is looking interesting right now, and I actually have another video coming up where FedEx will be the subject of that video, so make sure you're subscribed for that if you are interested. Before we sign off for this episode, there are a couple ex-dividend dates I wanted to highlight. One of our favorite dividend stocks in the healthcare sector goes ex-dividend, and that is AbbVie, ticker ABBV. If you have your shares, by Thursday, April 13th, you're going to receive their next dividend payment of $1.48 per share on May 15th. And likewise, AbbVie's cousin company, Abbott Labs, as they were once one company, they still hold their ex-dividend dates on the same day. So if you have your shares of Abbott Labs by April 13th, you'll be paid out 51 cents per share on May 15th. And that's all for today's episode, folks. This was the Weekly Dividend Recap. This is episode 4 for week 14 of 2023, brought to you on the Dividend Growth Income channel. If you found value and want us to continue the series, if you could, just please do all the things that help us grow our show and channel. And have a wonderful weekend, my friends. And if you're curious what I think are the best stocks to have for your watch list for the month of April 2023, go ahead and click through to this next video. Thank you so much.